All right, welcome back. Definitely, we're going to be looking at what's playing out in the commodities market. We've seen volatility. Well, I call it volatility at this point with the FX market. We talked about well, it was a great month. That's February. That's looking at the Naira in the official window. We did see a bullish trend in February, but March is starting off a little different at this point compared to what we had. What's 1,532 Naira, that was the close, and we're also seeing that same range play out in the parallel window. Then we're seeing the oil market, Brent, that's hammered so far, losing that $70 level per barrel. We're also seeing WTI farther away, about $66. So all of that, playing into what we're seeing for government revenue and PMS prices. We're seeing that the impact on PMS prices, we're supposed to have that inverse or direct relationship between oil prices in the global markets and PMS prices. So we've been seeing that reduction with the Dangote refinery acting as a price setter, going forward in the market. But we'll see if that continues, if these prices, that's talking about PMS prices, keep going down. Then we're also seeing a trend in the commodities market, that's domestic commodities market. Some of these commodities are coming down with the likes of gari, rice, flour, beans, but we're seeing cement. That's not trending down. Going by what we're seeing on FDC's slides there. Tomatoes, that's for the basket. We're seeing that's trending upward. I know we talked about pepper before, but we're seeing some kind of increase there for most of these prices. So we're going to be talking to Dr. Ifeoma very soon to see what's driving sentiment there. But first off, what's happening with the Naira? That's what we're going to be talking about, because we did see appreciation, before now, but we're seeing some kind of volatility. And we have Dr. Ifeoma right here. Dr. Ifeoma is going to bring us up to speed on what's playing out. Dr. Ifeoma, great to have you. Good morning.
Thank you for having me, Vladi.
Yeah, so last time we spoke, we saw the Naira was quite strong, and you did say that, watch out, this might not continue.
Yeah.
What are you seeing playing out so far?
Okay, I think the market is efficient, very, very efficient. And I said the other time that we shouldn't rejoice so early. If we look at what happened last year, February, Naira traded at about 1,900, and there was an increase of interest rate by 400 basis points, which Naira responded to and came appreciated to about 1,200. So I think the same thing is playing out now, and we're seeing this depreciation because there is high demand in Naira because of people traveling for Hajj. Of course, the Muslims are fasting, a lot of them are traveling, so there's a pressure in the FX market, demand is high. That's why we are seeing this push up. Of course, I remember I did said that it's going to trade between 1550.
Right, yes.
So that is where we are seeing it going to. I think that's the fair value of the Naira. And coupled with the fact that our earnings are beginning to drop. If you look at global oil price, that declined so much. And even below our budgeted crude oil benchmark of $75 per barrel, we see that it's gone below 70%. So earnings are reducing. So our reserve, if care is not taken, is going to deplete further. So all of these things is having impact on the Naira. But we know that it's going to be trading between, max is going to correct itself. The market is efficient.
The market is efficient,
yeah,
with FMs, right?
Yes.
All right, so you did talk about our Muslim brothers and sisters, traveling for Hajj. So after traveling, they will definitely come back.
Of course.
And they will come back with dollars.
Of course.
So what happens?
Of course. We've seen that happen before, that a lot of them that traveled for Hajj came back with the dollar not spent, and they push it into the market. Of course, we could see Naira appreciate if that happens.
Right. Okay.
So,
well, let's get them back
yeah.
as soon as possible. So we've also seen interventions from, the CBN that has also helped to,
Of course,
stabilize the
that help.
market with the $25,000 sales to the BDCs. But when you compare what's playing out, in the unofficial window and the price on the official window, what are you seeing there?
Okay, I will say what we are seeing there. The margin is not much. That gap has been breached just to avoid arbitrage. So it is the unofficial market, which is the parallel market, is the main market because a lot of people don't even have access to the official market. So that's why you see that price difference of very minute, I call it minute percentage that is not significant. So that's why you see that playing out there. And the official window, I think the CBN have the access to fund the BDCs, which we have mentioned earlier, by about $25,000 per week, which they have been doing. So the parallel market is basically what people are focusing on because that is the main market where you and I have access to. Because if you say you want to go to the official market to buy, you know the process,
right?
You know the protocols and all the rest. So we'd rather go to the official market.
Right. All right. So on the slides, we're also seeing cocoa prices down about 3.12%. What's driving sentiment there?
Okay, cocoa prices are dropping because supply is high. Of course, once there is excess supply in the market, you have what we call, it has like a bearish shift in the market because prices are definitely going to come down because there are excess supply. So that's what we are seeing. West Africa before now, we know there was drought, but now we are seeing rainfall, enough rainfall. So we have, which has impacted the yield of cocoa. So that's why we are seeing the prices of cocoa come down, and it's going to come down further because a lot of industry producing chocolates are beginning to look for alternative for cocoa. And what do we see? Is now $8,000
about $8,000
per ton. It used to. There was a time it peaked to up to $12,000 per ton. So now it has declined by about 30%. So that is also how our revenue is declining because these are sources of our revenue. External revenues are declining. So the best case scenario is this $8,000. The base case, the best was $12,000. The worst case scenario, you can see it trade between below $2,000 per ton. So what happens? So all of these filter into our earnings,
right,
and deficit for the government. Of course, government revenue is definitely going to decline.
I did see recently that chocolate prices actually went up. So if chocolate prices are going up and we're seeing cocoa prices coming down at this point, so we should be eating from that market, the chocolate market, at this point. All right, so let's look at domestic commodities now. I did mention we're seeing some changes when it comes to peppers and tomato. We talked about peppers last time. The prices were coming down.
Well, pepper actually increased,
but it's increasing now,
further increasing because of the Ramadan.
That was fast.
Yes, because once there's Ramadan, there are some specific commodities that respond to that. We have vegetables, you have the likes of course, pepper, tomatoes, they're all categorized as vegetables. All of those things, you see a spike. So what we see in the commodity market is a mixed prices. Some prices are high, some prices, but what strikes me is the price of palm oil, which increased by about 26%. So this could be as a result of inventory build up, because palm oil is not just used for cooking alone. It's used by manufacturers. Looking at the PMI increased to about 53.7%, showing that there are lots of manufacturing activities actually increase in the economy. So this could be the leading factor of that sharp increase in the price of palm oil.
Right. I
Yeah.
guess, the women that use palm oil for cooking won't be so happy, with that.
That's what we see.
All right. Definitely. But, going into next week, do you see this continuing?
You mean the commodity prices?
Yeah, the commodity prices. You see them still going up, or maybe a moderation might come?
Commodity prices, it depends. Depends on the commodity you are looking at. Because if you look at imported commodities like rice, you see them flat. I think because Naira is still hovering around a stability corridor, hovering between. So that's why we are seeing somewhat stability in that. But if the reverse is the case, because of what we are seeing happening in the global oil price and what we are seeing happening in cocoa prices, so all of this could also impact, we'll see what we call imported inflation affecting some of these commodities. Then commodities that are in season could come down. Then commodities that are triggered because of the Ramadan and all the rest will remain high.
Right. And maybe we'll see people run to substitutes at this point. Thank you so much, Dr. Ifeoma Nwokolo, is a research manager, financial derivatives company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, we'll take a break now. When we come back, we're heading straight to the global economy, and John McCoy will telling us what's playing out right there. That's to the moment. Just stay with us.